Good morning, I'm Tim Carter, I'm a Client Portfolio Manager on npower's Optimisation Desk. Welcome to this morning's market update on Wednesday the 2nd of March. So looking at markets today, the gas curve prices are just a touchdown on last night's close, while the prompt is fairly flat. Key drivers today are number one, oil markets and Brent prices particularly finding resistance to the upside around $37 per barrel as stockpile data is released today. Number two, we've got UK gas system about 5 MCM undersupplied as temperatures cool a little bit. And finally, number three, we see spark prices reduce from last week following the UK's announcements of capacity market reforms. Those are your main headlines. If you'd like any more information, please contact us on the email address provided. Otherwise, please continue to watch for a bit more detail. So, as I said, looking at the Brent oil contracts, they keep finding resistance to the upside around that $37 per barrel mark. We've continued to find support as players look at the potential for production cuts or freezes from the likes of Russia and OPEC. But today there's a bit of pressure on prices as American Petroleum Institute released figures suggesting that US stockpiles may have increased by around 10 million barrels last week. We've got official EIA data out this afternoon, so we may see prices move around a touch as market players position their bets ahead of the data release at 3:30. Looking at the UK gas system, as I said, undersupplied today by about 5 MCM. The main drivers really have just been a change in domestic demand, which is up by about 17 MCM compared to yesterday's levels. Elsewhere, we've got Langeled nominations from Norway down about 7 MCM from yesterday, but Roth nominations for withdrawal are up to pre-outage levels. We are expecting temperatures to just continue getting a little bit colder for the next week or so, which could increase demand, but then from about the middle of next week we should be back towards seasonal normal levels. Finally, looking at the UK fundamentals, the power side of things, we've got peak margins at around 8 gigawatts today, which is a bit tighter than previous days. That comes as wind generation is disappointing compared to forecasts of 6 gigawatts, which may also increase the pressure on CCGTs later this afternoon. One more thing on the UK power markets, looking at the announcements from the UK government yesterday in terms of the capacity market reforms. More details were released suggesting an additional 3 gigawatts will be procured for auctions going forward, and we're also expecting obviously the period to be brought forward and a new auction for the 2017-18 period, along with tighter penalties for not delivering on contracts and more emissions legislation to limit the impact of dirty diesel peak generation. That all has contributed to around 60 pence per megawatt hour reduction in spark spreads, particularly on the winter 17 contracts, and all should help promote more investment in CCGT generation going forward. That's it for today. As always, have a great day and we'll speak to you again tomorrow.